Hey everybody, and welcome back inside another edition of the Mortgage Impact Podcast. We're talking about some industry tips today, and specifically going to talk about condominium loans. And we are so thankful to have Sam Chazanow here, who is the Condo Express manager, the team manager. Sam, thanks so much for being here. Appreciate you.
Oh, my pleasure. It's great to be here.
Very cool. I'm very excited to talk to you. We talked upstairs a little bit earlier. You sat down with our department, our marketing department, to look at really just go over a deep dive into what condo loans are, because for a lot of us, some of us are new, some of us have not been in the mortgage industry that long. You have now 31 years in the mortgage industry and looking at condo loans and how they've evolved, because they can be a confusing thing. But I want you to go over how you've seen them evolve, because you guys have just hit a huge milestone, and you guys are what I would consider experts in this. You guys just hit $1 billion in volume in the condos for Movement Mortgage.
It was a great year, and it took us several years to hit that, but slowly we started out, thanks to Toby and Casey, having the desire to have a strong condo department. They understand if they wanted to grow the market in urban areas as well as resort areas, they had to have the right condo team in place in order to recruit the right talent. And we started out very slow, but every year we continued growing and growing as our reputation in the field with our realtor partners became more solid, and we started being able to develop more and more referrals.
With condos, like I said, it can be a little bit confusing. So tell me what differentiates for somebody who's like a realtor who might be listening to this podcast thinking, oh, I've thought about going into condos, but they're kind of confusing. Or for even a loan officer who's just starting out, or maybe somebody who might need a little refresher, maybe looking to add another facet to their business. What is the difference there, and why are they a little bit more difficult than another loan would be?
Well, they are, because they have an additional component. On a regular transaction, when somebody's buying a single-family home, the realtor only has to worry about whether or not the borrower is qualified and if the property appraises out. With the condo, we have to make sure that the project is warrantable. What that means is that it's sellable to the agencies. If you're dealing with a veteran, we have to make sure that VA will accept the condo. If you're dealing with an FHA buyer, we have to make sure HUD will approve the condo project. Or if you're dealing with a conventional buyer, owner-occupied, second home, or investor, we have to make sure that Fannie and Freddie will accept that project. Because condos, unlike single-family homes, a condo, you're just buying the airspace, the walls in airspace. So we really need to know what's going on in that project. We need to know what the budgets look like, the insurances, and we need to know if there's any ineligible characteristics. And that's what our team does. And we make it very easy for our loan officers.
You were a loan originator for a long time too, right?
Over 25 years, yes. Yeah.
So what have you seen change, and what are some trends you're seeing in your experience that are picking up even in the last couple of years?
Over the last several years, the agencies have really eased up on the condominium project requirements. It's actually gotten easier to get condo projects approved.
Really?
Yes. Back in 2008-9, when we were going through the downturn, things tightened up. But since then, the market is opening up, and our biggest challenge nationwide is affordable inventory.
Yeah.
And condos fit that. It's usually less expensive than single-family homes. Millennials like it, first-time buyers like it. Even people downsizing, baby boomers, that empty nesters where the kids have moved out. They want to go into a single living level property where they have security, they have all the amenities, and they can travel.
I got to tell you, I am that demographic, by the way. I'm 35. I am a millennial. I was a first-time home buyer, single woman. That is another big demographic. And it's interesting because when I was looking around, I was like, well, I've just had it drilled into my head, single family home. And it was difficult to find. You talk about inventory for me and what I need size-wise. I don't need a $400,000 house. I don't need a 3,000 square foot house. I need something smaller. And I think people might be in the millennial age associating condos with, 65 plus. And it's interesting how much it has changed in the accessibility and the affordability of it as well.
It really has. And what we see is in downtown urban areas, Washington, D.C., New York City, downtown L.A., San Diego, you're running out of space. You're running out of space, And this is where people want to live. This is where people want to work. And in order to do that, you have to make proper use of the airspace. So you have to go vertical. And that's really what the study of condominiums are, utilization of airspace.
In 2019, there was a big change in the industry as a whole, obviously, as interest rates went way down, a full point and a half lower than they were in 2018. So in 2019, we saw business boom in a lot of different places. Refis were pretty big, even just loans in general, people getting out there and buying. What changed in 2019 that was big for you guys? Because there was some change, and like you mentioned guidelines earlier. What was that change, and how did that help you in the condo area, and people can take advantage of that now?
Huge changes. Between 2018 and 2019, I've seen some of the most significant changes in Fannie and Freddie financing in my whole 30 years. We've seen investor concentration rules ease up. We've seen commercial space rules ease up. Single entity ownership issues ease up. We've also seen FHA now allow lenders to approve projects under their single unit approval program, which was just launched this past October. Mm-hmm. And in January 1st, VA just eased up on their loan limits by eliminating the county loan limits.
That's big.
That's huge.
What does that mean for people who, when they hear, oh, county loan limits, like, okay, what should pique their interest there?
Well, for many years, VA had a county loan limit, and it was based upon median house price. And we have veterans that are just out of the service, millennial veterans, but we also have a lot of baby boomers, like myself. I'm a veteran. I served back in the early 80s. So I may want to buy a condo that may be in the high sevens or eights or even low millions. As a veteran, with this new change, I can now buy a condo, $1 million plus, and not have to pay any down payment.
That is insane. That's awesome. That opens up so many possibilities. But that is a huge change that just happened.
It just happened, and again, this is a growing trend. Fannie and Freddie had their major changes in 2018. FHA had major changes in 2019, and now VA is having their changes in 2020. So it's an exciting time to really understand condominiums and how the agencies are making condominium financing easier and more affordable.
You guys just have so much going on. There was another regulation. It's a little bit more specific that has to do with the VA. Tell me a little bit about what you know and what's been enacted so far with the Blue Water VA thing. People might have seen headlines about that. Can you offer any clarification?
Yes, the Blue Water Act is an act that actually extended VA benefits, health benefits, to members of the armed services that served in Vietnam but served on the water. But tied to this bill, they had a huge housing amendment that changed the funding fee requirements, so they leveled it out between National Guards as well as with active duty members. But the biggest change has to do with eliminating the county limits. For instance, if a veteran wanted to buy a condo and the county limit was $500,000, okay, they could buy a condo up to $500,000, no money down. But if they wanted to buy a condo over that, say $1 million, they would have to put a down payment equivalent to 25% of the difference. So they'd have to be putting about $125,000 down. Now they've eliminated that.
Yeah.
So it means with these current interest rates, which are very attractive, they can now buy real estate and still keep their investments in the market or wherever their financial planners would like them to keep it or recommend they keep it. One other change with the Blue Water Bill is for active duty veterans who received the Purple Heart. For many years, and VA still continues, to waive the VA funding fee. That's their insurance for VA loans.
Okay.
There's no mortgage insurance premium, but there is a funding fee. And VA waives that if the service member has 10% or more service-connected disability. With Blue Water, they added another category, Purple Heart recipients, people who were injured while on active duty, that are currently on active duty, that aren't disabled. So they no longer have to pay the VA funding fee.
Wow, that's really big for a segment of our population that truly deserves something like that in their lives to make it a little bit easier. Condos there is an extra level of complication with them. You've been doing this for a long time as an originator, and now with Movement, last 6 years, 5?
Yeah, I actually got active with condos in 2013.
Okay.
And that year, we more than doubled production from the previous year, and it's been steadily increasing, with the exception of 2018.
2018 was a little bit of a wrench in everybody's mortgage plans. So what are some big mistakes in your experience and what you see, because you see this day in, day out? This is your life that you live, is the world of condos. What are some easily avoidable mistakes that either LOs or realtors make, something that you see consistently, like, no, don't do that. There's an easier way to do this, or explain this a little easier. What are a couple top 3 hard-hitting things that people can do that are mistakes in the world of condos?
Well, the biggest mistake is not understanding the agency guidelines. Mm-hmm. For years, I've been on the road traveling. During 2016 and 17, I would speak to thousands of realtors a year, and realtors that have been in the business almost as long as I have in some cases. And most of the realtors do not understand what the agency guidelines truly are. A lot of them think that because this lender will not approve it, the whole project is ineligible. But realtors don't understand that lenders have the ability to add their own rules to agency guidelines, overlays.
Oh, okay.
Yeah, we have absolutely no overlays to the agency guidelines. So that makes it a lot easier for us. We're able to approve loans for the agencies that other lenders have denied and told their realtor partners that the projects are non-warrantable.
It's interesting because the condo loan only has to go by the actual agency guideline.
Right.
Interesting. Is there anything else people kind of either gloss over or, look at condo loans and maybe mess up here and there that is costing them some money somewhere?
Oh, sure. One of the big things is a lot of lenders wait until do the project reviews after the loan's been approved on the credit side, after the appraisal's been ordered and property inspection's been ordered. So it's usually one of the last things that lenders do. At Movement, we do it up front. In many cases, we do it up front even before the buyer has a ratified contract. Over the last 7 years, my team and I have approved close to 20,000 condo projects for Fannie and Freddie financing. And most of these projects were approved even before the buyers had contracts, so they knew upfront with certainty that the project is eligible for the same type of financing that they're eligible for.
Wow. That's a lot. That's a lot of, taking into account what the average, median home price would be for a condo, depending. It could, like you mentioned, go up into the millions if need be, or, be in a little bit more affordable range, 200 and below. What's the potential volume for condos in a year? Depending on the area, of course, it depends on a lot of factors, but what additional income or what additional branch of a business can someone do if they branch out into condos and start understanding that a little bit more and offering that up as part of their business model?
That's a great question. We haven't compiled all the 2019 data, but in 2018, the condo purchase side was over $274 billion. So it's a huge market. We're just starting to scratch the surface.
And 274 in a market that was not great.
Nationally.
Yeah.
And not great.
Right.
Exactly.
Yeah.
That's just on the purchase side. That's not even considering the refinance side, which was about 17% of our production last year. Mm-hmm. That's huge. And we see great opportunity. We like to make the process easier for our loan officers. We don't want them to have to go and gather documents. All they have to do is contact our team, and we have a condo concierge. We have dedicated concierge that if you provide us with the name of the project, the address of the project, and point of contact, We'll check our databases to see if we have information on that project. If we already have the project approved, our approvals are good for 12 months. So we never have to go back and renew them unless something material changes. If the project is not approved and it's not already on the Fannie Mae list, or now, because there's reciprocity with FHA, if it's not approved by FHA, our team will reach out to the HOA management company and get those docs. And our team will let the borrower know and the loan officer know within 24 to 48 hours of receiving those documents if that project is eligible for agency financing.
I see a lot of apartment complexes going up, and we're in the Charlotte metro area here at the National Sales Support Center for Movement. So anybody who lives in an urban area will definitely see a lot more condo projects, townhome projects, a lot more apartment buildings going up. Is this, and you mentioned space, is that just, are you seeing even more and more and more projects come in to you every year? Like even the start of 2020, I think this was really funny. There's actually a drink in a bar in Charlotte that's actually titled "Oh Yay, More Apartments," but it's good if it's for us in a condo. And are you seeing that trend more and more, even at the beginning of 2020? You're seeing more projects being submitted?
Absolutely. The general term is called common interest communities,
Okay.
And that encompasses regular apartments. It encompasses condominiums, planned unit developments, and cooperatives. Our specialty is the condominiums. And what we saw back in 2009 and 10, projects that were coming to market because of the economic downturn actually started out as condos but ended up becoming apartments. And now these apartments are converting back to condominiums. And our team will help the builder developers navigate the new changes in agency guidelines so they can make that conversion simple and efficient.
That's really interesting because right after that downturn, you say it constricted just a little bit and they turned what were condos into apartments.
Yeah.
That's interesting. So you're starting to see that revert back.
Revert back, yes. And we advise builders, developers that are looking to do a conversion to navigate the agency red tape.
Interesting.
Yeah.
Wow, there's a lot of exciting times for you guys, hitting $1 billion in 2019, and people are projecting that rates are going to stay right around under 4% for the rest of this year too.
It's an exciting time, and thanks to Movement's capital markets, they're coming up with more and more products. We have a great product called Dream to Own, a no MI first and second combination where we can actually provide up a first mortgage and a second mortgage up to 101% financing. And we have a team down in Florida that's starting to market that product aggressively. Mm-hmm. So we're pretty excited, not only with the Fannie Freddie, VA, FHA, and USDA, which, by the way, we do a lot of USDA financing, and now having these other niche products.
Very cool. Sam, thank you so much for joining us today in the Mortgage Impact Podcast. Appreciate your time.
Thank you for inviting me.